There isn't much changed in the decor since the last time we were here, Sumaira.
That's true actually, but change is not always good, is it?
Actually, that's good logic, Sumaira. I think in mutual funds as well, change is measured using a variable called the turnover ratio. The turnover ratio actually expresses the extent of which the fund manager is making a change in the portfolio which he or she has created. For example, if there's a 100% turnover ratio, it actually implies that the entire portfolio has been changed by the fund manager in that stipulated period of time which is being discussed.
So generally, a high turnover ratio is not perceived to be a very good thing. A 100% turnover ratio means that the entire portfolio has been changed in that duration, while a low turnover ratio means that the fund manager follows a buy and hold strategy, which actually indicates conviction in the stocks that they have. But this is not always the case, is it, Feroze?
It certainly isn't the case, Sumaira, because in India, the tax element for a fund manager's change is zero. So fund managers don't pay capital gains when buying and selling. Unlike in the US, where fund managers, when they buy and sell, they end up paying capital gain tax. That's point one. Point two is, when a fund has performed very well, because of its underlying stocks having done very well, it's the duty of the fund manager to bring in newer stock ideas and replace those ones which have already run their rally. So turnover ratio at different points in time has a different interpretation. So it's important to know this variable and then take it from there as your decision-making criteria.
So that's a fair point, Feroze, but for a retail investor, how do they actually judge this on a case-by-case basis?
It's important for a person to remember that what goes up also comes down. Since a mutual fund, especially the equity mutual funds, are a basket of shares, a higher performance implies that the shares inside the portfolio of a mutual fund have risen. So it's important to see high performance with high churn ratio, which will mean that the fund manager has sold all those stocks which have had the rally and brought fresher stocks to take the fund's performance forward. So high performance as a combination with high churn ratio is definitely a buy.
All right, so that's something for you all to remember. And normally we say why fix what ain't broke, but like Feroze just showed us, you don't want to always have to wait for something to break before you fix it. Generally, we spend a lot of time thinking about where we should invest and how we should invest and how long we should hold it for. But normally, we don't give a lot of thought to how our investments are taxed.
Yes, we all try and plan our long terms, but there are circumstances which are beyond our control when we need to undo the decision of an investment. And there comes short-term capital gains.